Good morning, everyone, and welcome to How to Save on New Jersey Disability Insurance. I'm Vinny Civitello, Communications Manager for the New Jersey Business and Industry Association. With us today are Tom Fascino and Jim Iannicelli from Arch Insurance. A few housekeeping matters before we get started. Today's webinar is being recorded and will be emailed to you tomorrow along with the PowerPoint for today's presentation, so be on the lookout for those. I'd also like to draw your attention to the Questions tab. Tom and Jim would be happy to take all of your questions, so don't hesitate to write them in as they come to you, and I can't stress that enough. Be sure to type them in as they come to you, or you may forget what you wanted to know by the time we come to the Q&A. So now let's get things started. Tom?
Thank you, Vin. Yes, as Vin mentioned, I'm Tom Fascino from Arch Insurance. I'm joined here today by Jim Iannicelli as well from Arch. I'm going to go through understanding New Jersey temporary disability. So today we're going to look at an introduction to what's known as statutory disability in New Jersey, how it works and who benefits from this plan, your options as an employer, and Arch's solution for New Jersey BIA members. So in the country today, there are 5 states that have mandatory disability: California, Rhode Island, Hawaii, New York, and New Jersey. And that means in these states, all employers must provide short-term disability for each of their employees. So in New Jersey, with the exception of a few certain government employees, every company is required to have this coverage. So from the smallest pizzeria on the boardwalk in Wildwood to some of the largest corporations in the state, all of those employees must be covered. And each one of those employers does have a policy to cover them. So what is this New Jersey benefit? Now you'll see it called a few different things. It could be called short-term disability, temporary disability insurance, or TDI. You might see it as TDB. So there's a few different names for it, but it all really means the same thing. And that benefit to your employees is a partial income replacement for employees who are unable to work due to a non-work related illness, injury, or disability. The benefit they receive is 66 2/3% of their average weekly wage, up to a maximum of $633 per week after a 7-day elimination period. The maximum duration employee can be out is 26 weeks. So examples are maternity. That's, I'd say, the largest claim that is seen for this type of insurance are for maternity and for recovery. It could be for an off-the-job accident. You go skiing, you break a leg, you're going to be out for a few weeks, or recover from an extended illness, such as recover from a heart attack or something serious like that. So in New Jersey, employers have a choice. They can shop for this insurance on the open market through a private insurance carrier, or they receive this coverage through what's known as the New Jersey State Plan that is managed by the Department of Labor. As you'll see on the pie chart on the top of the screen, that the vast majority of employers in the state are in the New Jersey State Plan, with only about 5% in private insurance carriers. And the reason being is that in New Jersey, unlike some of the other states, as a company registers with the state, they're automatically put into the New Jersey State Plan. So that's where everyone starts. And if you choose, you can leave the plan to go to a private carrier. So the benefits of moving to a private carrier, are reduced cost and improved services. But you should note that a private carrier or the state plan have the exact same benefit for the employees. So a private carrier must have exactly what the state plan calls for, or better. The state also sets the employee contribution rate. So a private carrier does not and cannot charge more to employees than the state charges. And they also set what's known as the wage cap, and we'll get into that in a minute. So who pays for this coverage? So this coverage is paid for by employees and employers together. pay the premium for New Jersey disability. Employees have a payroll contribution that's made, and their contribution rate in 2017 is 0.24%, and they pay that whether they are with the state plan or with the private insurance carrier. The employees also do a contribution, and that is more based on what we call their claims experience, so basically their claims history. If you've had more claims in your company, then your rate is higher. If you had less claims, then your rate is lower. But the point here is that both employees and employer both pay the premium for this coverage. So to see how much you're paying, we've put a form on the right side of this screen, and this is what's called the Notice of Employer Contribution Rates. Now, every employer in the state receives this in the July-August timeframe from the state, and there's a lot of information on here, but you'll see down, and we've highlighted these in red, on line K, it shows you the wages that your disability insurance is based off of, and also your final disability rate on the bottom. This is an important form to note, and we're going to be coming back to this because this is what we use as a private carrier to basically come up with rates for your company. So as I said earlier, the employees and employers both pay into the state. So if you're a new employer coming into the state and I should say registering with the state, you're going to get a disability rate from the state of 0.50%. So they kind of put you right in the middle of the range. And after 3 years, they'll look at your experience, the kind of claims that you've had, and either move you up that scale or down that scale to see how much the employer is going to pay. You can see that the highest rate is 0.75% and the lowest rate is 0.10%. The employees on the rightmost column always pay the exact same rate, and it's reset every year. And it's reset by the state. So I just want to give you a few examples here to try to make this a little clearer. So let's look at two different companies. So here on example one, ABC Company has 50 employees, and they have a covered payroll of $1,675,000. On the left side, we give an example of how much the employer is paying. So in this particular example, the rate for this employer is 0.25%. So if we take their covered payroll, multiply it by 0.0025, it equals $4,188. That employer is also asked to pay something called the employer DI assessment, and this is basically a fee, like an administrative fee that all the employers pay to the state based on their covered payroll. So just to recap here, that employer is going to pay the $4,188 and the $462. On the right side, the employers are paying 0.24%. So we take that covered payroll, multiply by 0.0024, and the total of what those employees are going to pay is $4,020 collectively. So the total annual payment to the state for this particular employer, you can see on the bottom, are those numbers totaled up. And so for this employer, they're paying $8,670. The second example here for the XYZ Company, this is a little bit of a larger employer, 150 employees with a covered payroll of $5,025,000. This employer has a rate from the state of 0.10%, so that's the best rate that the state has out there. Multiplying the covered payroll by the rate, that employer is paying $5,025, and their assessment is $1,387. So the total of those two is what the employer pays. And on the right side, the employees for XYZ Company are paying 0.24%, multiplied by the covered payroll, and those employees together are paying $12,060. So if you total up this particular one, sorry, my screen's cut off. This employer is paying $18,472. So that's the employees total. They're paying that amount. Hopefully I didn't lose anybody on that example. So given that, employers in the state have the option of moving out of the state plan, like I mentioned earlier, and they would move out for cost savings, improve claim service, and there are some employers who want to offer a more enhanced benefit to their employees than what they're currently getting from the state. So employers have that option, and for them to move out, it's a simple process of getting a quote from an approved insurance carrier in the state, holding what's known as an employee consent election. And that just basically means getting a simple majority of your employees to agree to moving from the state plan out to a private insurance carrier, and then signing the application form. So if we look at this pie chart that I showed earlier, so why aren't more employers moving out of the state plan? And the majority of this is just knowledge. Many employers don't know that they have the option to move out of the state plan. It's very easy to stay in, but most don't know what their options are or what it actually means to them if they were to move out and the kind of savings that they could have. The other barrier is this employee consent election. Like I said earlier, you have to obtain a simple majority of employees to consent to move out. And so that can be a little difficult depending on the size of the company to actually have that election take place. And it's really not a big deal. It's basically going around with a clipboard and a form and just having and collecting signatures. But again, depending on the size of the company, it can be a much bigger process. So let's talk about Arch's partnership with NJBIA. We joined up with NJBIA about a year ago, and what the association liked about what we had to offer is that when they learned more about New Jersey disability and they realized that all of their members are paying for this, and all of their members could benefit from an insurance carrier being here to provide special rates and special protection for their members, they really liked the idea. And we formed that partnership just about a year ago. And I think it's been very beneficial to the association members and to us. And you may have seen some of our advertisements on the websites and in the magazines that we've put out there, to help to drive people to our space on the website, to try to inform members on what their options are and to drive them to at least to get a quote to understand what they can be saving. So what we've done for the members is we've put together special pricing for the NJBIA members that no one else can get. We've also done something where we put members into what we call an insurance pool to help stabilize rates. And what that means is that we look at all the members of the association that have a policy with us, we look at them together and we evaluate that. And so we would only raise rates if the entire pool is now starting to have more claims than we expected. But otherwise, we try to keep everything very stable, and it stabilizes the more members that join the pool, it stabilizes rates even more. When you're just with with a standalone policy with another carrier, or you're in the New Jersey State Plan, if you've had a couple of claims that year, chances are you're going to see your rate go up. So this helps kind of prevent it, against that. Arch also pays that annual assessment fee that I showed earlier in the example. There's no additional cost to employees for the Arch coverage. We have a very good reputation of very fast claim payments, and this is very important for your employees. When they're out on disability, the last thing they want to do is worry about where their check is, because don't forget, that's their income at that point. So we pay our claims in an average of 4 days or less. The New Jersey state plan, it could be 2 to 3 weeks for them to pay a claim. So like, you keep that in mind. It is important for your employees. And you as an employer also if you have access to Arch's online FICA and claim reports, and these reports can become vital when it comes close to year end, you're putting together your taxes, or you just want to have general information about all the claims that have been placed. So I want to go through what these discounts look like. If we look at this grid from left to right, on the leftmost column is the rates from the state, and that middle column, well, the second two from the left column where it says Arch employer rate, these are the rates that we will charge if, again, depending on what rate you have with the state. So if we look all the way at the bottom, the 0.10 rate from the state, the Arch employer rate for that is 0. So what that means is that we would pay the premium just on the employee contributions for that particular employer. So if you have a 0.10 rate, the employer is not going to pay anything, and the employee's contribution will pay the premium. If you have a 0.15 rate, you're going to be paying a 0.09 rate with us, and that's a 40% savings of what you're paying today with the state, and so on as you go up the list. The employee rate never changes. Again, that is set by the state, and that is always the same. And you'll see on some of the higher ones where it's 0.55% or up to 0.75%, that's something where we need to look at a little closer, and our Arch underwriters will take a look at that and come up with rates on that. But we don't have those to publish here. But this gives you a good visual on the type of rates that Arch is offering, and you can see the savings there to the employers. So what I want to do here is give you an example of go back to this XYZ company. Let's take a look at what it is with the New Jersey state plan, and then what it would be if they came over to an Arch policy. So just as a recap, this employer has a state rate of 0.10% from the state, and they're paying $5,025 plus the $1,387 in the assessment. So if we look here, if this employer moves over to an Arch plan, we're taking their rate down to 0. So now they're not paying anything from them from the rate, and they're not paying anything from the assessment. Arch is going to pay that assessment. So for this particular company, the only premium that we are going to receive is the contributions from the employees, the $12,060. So this is 100% savings to that employer. Now, if this employer had a rate of 0.15 or 0.20, something from the state, you'd see a similar type of example here. Now, they'd have a rate from us, and there would be some premium coming from that employer, but it would be, again, much less than what they're paying to the state today. So what I want to do now is I want to turn this over to Jim Iannicelli, who can talk a little more about how to get a quote. And we've put this form on here again so you can see it. He can talk a little more about how to go about obtaining a quote.
Great, thank you, Tom, and good morning, everyone. Yeah, so I think Tom did a thorough job of explaining, why this program would be an advantage for the NJBIA members. And so the logical question is, well, how do I get a quote? There are a few ways you can get a quote. The first one is we do have a servicing agent, Two River Benefits, who is the agent for this program, and you can contact Two River Benefits at the telephone number on the screen, or the Arch NJBIA at archinsurance.com site. The next question, what do I need for a quote? The best thing to have for an accurate quote would be that notice of employer contribution rates form, which is off to the right there. Again, those forms just went out during July and August of this year. The most recent fiscal year is for 2017 through June of 2018. If we get that form in, we can basically turn a quote around in less than 5 minutes. If you do not have that form, we can still get you a quote. We would just need to know the legal name of the company and also the employer tax ID, and it would also be helpful if we knew what the wages were for your group. When we talk about taxable wages, again, those are the wages for employees capped at $33,500 per employee per year. So again, 2 ways. If you have that notice of employer contribution rate form, that's ideal. If not, we just need your legal name, Fed ID number, and approximate taxable wages for your group.
So yeah, I think it's important to note that since you are already covered under this insurance, it costs nothing to get a quote. You might as well find out if you have a good savings and what you can save. And it really doesn't depend on the size of the company. This is something that is an option for every employer in the state. It's written into the law that you have the option to move out and shop your policy. You shop every other policy that you have, for your company. You think about how many different insurance policies you have. This is one that most employers don't realize that they can have that savings out there, and you might as well put it into the mix of everything else that you shop and at least see what your options are. Because as you saw in the example, the savings can be significant. So I just want to touch on real quickly the claim process with Arch. So you will have employees who will use this coverage, and it's a very simple process to submit a claim. There's 3 sections to the claim form: an employee section, which captures just the general information, name, address, social security number, and the reason for the disability. There's a medical certification where we verify and identify the disability. This is really done through your healthcare provider, who will give us all that information and your expected return to work date. And there's an employer section, which the employer fills out, which verifies the length of employment, the last day worked, and 10 weeks of salary history. Our claim examiners review all that information, set up, and then set up those claim payments. And they're very diligent, and will if there's something missing on the claim form, they'll call you, walk you through the process, and make sure that everything is in order. So that concludes our introduction of the New Jersey Disability Insurance and the Arch offering. And I think, Vin, what we'd like to do now is open it up to any questions that may have come in.
Thanks, Tom. Looks like we have a couple questions already, but I want to give everyone a moment to type in anything they have. While I'm doing that, I'd like to take a second and remind you about the Handouts tab. I used to get a lot of questions from people about how to download the PowerPoint slides, and ever since I started stalling time explaining this, that's gone down. So just open up the tab marked Handouts, and the file is right there. You can also just wait until tomorrow, and they'll be emailed to you with the video recording of the webinar. And there's the Questions tab. If you have a question, type it in right there, and I'll make sure our guests answer it. And don't be shy. You're going to get a survey after this is over asking how you liked the webinar. And whenever someone says something like, oh, I really thought this was going to be a webinar about X, as long as it's relevant to the webinar, I always ask, why didn't they just ask the question? So this is your opportunity to ask that question and leave happy. So with that out of the way, let's go to our first question that comes from Phil, who asks, is there any change in coverage if I move from the state plan to you?
Great question. And the answer to that is no. Basically, the way the program is set up is any private carrier, which is what Arch is, must adhere to the same set of rules and laws as the state plan. There can be no reduction of coverage when you move to a private carrier. So the coverage is basically identical should you wish to move to Arch.
Okay, this almost never happens, but we had two people at the exact same time ask basically the same question. So Susan and Janice both want to know if this coordinates with the New Jersey paid family leave or the FMLA.
Great question. Yeah, so basically, when you move to a private plan and under the NJBIA program, Arch would take care of the disability portion of the benefit, and the state would remain as the carrier for paid family leave. We do have an obligation, however, of notifying the worker of their rights under paid family leave and notifying them of how to initiate a claim with the state. So to answer, Arch would not actually handle the paid family leave claim. We would handle disability, but we would give the claimant all of the information needed for them to submit a paid family leave claim with the state.
Cool. Patricia asks, if I go into the insurance at a disability rate of 0.2%, will it be reevaluated next year like the state does, or am I now fixed with my insurance cost?
Great question. So basically, what we were talking about, that pooling mentality, and the way this program works is we take everyone's premium, everyone's claims, and we basically lump it all together. And as long as the overall NJBIA pool results are good, then no one gets any type of rate change. However, if the results are not so great, only those employers who basically would have gotten a rate increase from the state of New Jersey would possibly receive a rate change from Arch. So it is different from the way the state plan works. We don't look at experience for each employer annually. It's basically looked at as one insurance pool.
Okay, Mary asks, is it worth it for me to switch to you even if I don't have a lot of employees?
Absolutely. There's still going to be savings. The savings may not be as much, but New Jersey's an expensive state to do business in, and we've designed the program so that employers, like Tom said, from smaller, pizza shops up to the largest corporations can take advantage of the savings.
Great. Joseph asks, are there options to bundle it with supplemental STD and LTD insurance for my employees?
This program does cover only the state mandated disability, so any coverage over and above the state disability would have to be purchased separately. However, when you move to a private plan, you do have the option of enhancing your benefit plan over and above what the state is currently covering. The only requirement with that is that it cannot be on a voluntary basis, where some employees elect to take the enhanced coverage and some don't. The entire group would have to take the enhanced coverage. But again, under New Jersey law, the state can only write the base coverage. Private plan carriers are able to go over and above the base coverage.
So let's find our next one. Janice asks, Is there still an employer-employee tax for the New Jersey paid family leave? I believe it's currently embedded into the SUI/SDI cost.
Yes, it would be the same tax that the employee would contribute to, and there would be an employer tax or premium due unless you had that most favorable rate with the state, where, as Tom showed, we take the entire employer cost away. But as far as the employee part of it, it works the same way as with the state. And we do get questioned a lot. So I've been with the state plan for 6 months, and I took deductions from my employee. Do I start over again at $1 if I move to a private plan carrier, say October 1st? And the answer to that question is no. The employee can only contribute up to that $33,500 limit, regardless of any coverage change during the year. So you would just pick up where that employee left off in earnings if you move to a private plan carrier.
Looks like Susan has the inverse question that Mary had. So she says, your slide of employer costs looks like it's for employers with 250 employees or less. I have about 800 employees in New Jersey. Would there still be a savings?
Yeah, so what we do in situations like that is we get the data from the state to what is called experience rate your case. So we get the notice of contribution forms from the state, generally the last 3 years of forms. We look at how much premium you've paid, how many claims have been paid out under your account, and then we absolutely try to offer rate savings based on that data. So any group over 250 lives, that's what we'll do. We what's called experience rate the case, rather than follow that grid that Tom was talking about. And we have been able to offer larger employers savings under the program. Significant savings, yes.
Awesome. Michelle asks, can you tell me why my rates would be more protected through you than the state?
Well, again, it comes down to the pooling mentality. So let's say you're kind of, you're cruising along, you haven't had a claim in 3 years, and then it just so happens that you have a maximum 26-week claim under your account. Basically, if you're with the state, they're going to look at that and say, well, we may have to increase your rates. Whereas if you're part of this pool, you have the protection of the other members' experience. So you're kind of not, swimming or flying solo, I should say. You're part of a larger group. So there is definitely more protection being part of the NJBIA program.
Patricia asks, if I go to Arch Insurance and an employee has an accident next month, is there any window of non-coverage?
No, under state law, if the disability occurs during the Arch active policy period, then we would absolutely be on liability. One of the other questions I'm asked a lot is, what happens if a claim has started with the state prior to the plan being taken over by Arch?
Oh, yeah, that's a good one.
In that instance, the prior carrier is responsible to fully complete that claim. So Arch is responsible if the disability begins during our policy period.
Julian asks, should I wait for the new year if I want to make a switch?
Yeah, actually, switching on the new year is actually probably the most optimal time to move this coverage. you've just received, as Jim was saying, that notice of employee contributions. So you have the most up-to-date information. And what that allows us to do is basically really give you the most accurate rate using that information. And also it becomes an advantage if you're using a payroll provider. It's always a good time. It's always more advantageous to move it at the beginning of the year, so at least those contributions, everything is moved and adjusted, starting with that fresh new year.
All right, I've got one more here, but if somebody wants to sneak in more questions while they're answering it, by all means, we'll stay on as long as the questions keep flowing. So Josephine asks, can this deduction / payment be worked out with a payroll processing company that handles our payroll so we don't have to do it?
Absolutely. We are asked that question all the time when coverage moves over to us, and the payroll providers are aware that there is a private plan option for this coverage, and they're generally equipped to handle that change. So
we do it often.
Often, all the time.
Most of our employers who have this coverage are coming through a payroll provider. Yeah.
All right. One more from me, I guess, is how do people get a hold of you one more time? Do you have a phone number, email?
So they would, one of two ways. They would either contact Two River Benefits at 732-842-6200, or they can contact us online at archnjbia@archinsurance.com.
Awesome. That looks like all the questions we have, so it's as good a time as any to bring this to a close. Don't forget, all of you will be receiving a recording of today's webinar and the PowerPoint slides via email. And when you close out of the webinar, a survey will come up on your screen that we hope you'll fill out so we can understand how to best provide you important information in a webinar format. Our next webinar, Bridging the Skills Gap Through New Jersey Community Colleges, will take place Wednesday, October 18th, so be there or be square. So until next time, for Tom Fascino and Jim Iannicelli, this is Vinny Civitello thanking you for being with us this morning and wishing you a great day.